Canada is shifting its oil export strategy. The country is moving away from its traditional reliance on the United States. This move is significant. It signals a change in Canada's economic and political landscape. Canada aims to diversify its markets. Asian markets, especially Japan, are becoming increasingly important. This shift is driven by several factors. One factor is the risk of U.S. protectionism. Another is the growing demand for energy in Asia. Canada sees an opportunity to secure its economic future. It wants to be less dependent on the U.S. This new direction has the potential to reshape the global energy market. It also raises important questions about Canada's role in the world. Will this shift lead to a more sustainable energy future? Alberta, Canada's energy heartland, is leading this transformation. The province is home to vast oil sands reserves. It has been heavily reliant on exporting oil to the U.S. Now, Alberta is looking to diversify its markets. This shift is supported by the Canadian government. Prime Minister Justin Trudeau has been engaging with industry leaders. He is also talking to experts, labor organizations, and Indigenous communities. The goal is to create a new energy strategy for Canada. This strategy includes increasing domestic trade. It also involves reviving previously shelved energy projects. The Trans Mountain Pipeline expansion is one such project. This project will increase Canada's oil export capacity. Canadians are largely in favor of this shift. They are concerned about the country's dependence on the U.S. Trade tensions between the two countries have highlighted this vulnerability. Canadians want a more secure economic future. Canadian energy companies are also preparing for this change. Suncor Energy, a major Canadian oil producer, is one example. The company is focusing on domestic markets. It is also looking to export more oil to Asia. Richard Kruger, Suncor's CEO, has expressed confidence in this strategy. He believes that Canada is well positioned to compete in the global energy market. The company is investing in infrastructure to support this shift. For decades, Canada has relied heavily on the United States for its oil exports. In 2022, nearly all of Canada's crude oil exports went south of the border. This over-reliance has made Canada vulnerable to changes in U.S. policy. The recent trade disputes between the two countries have highlighted this risk. The imposition of tariffs on Canadian oil exports has hurt the Canadian economy. This has made it clear that Canada needs to diversify its markets. The move away from U.S. dependence is not just about economics, it is also about energy security. Canada needs to ensure a reliable market for its oil. This is essential for the country's long-term prosperity. Turning East Asia's allure and the promise of Japan. Asia presents a compelling alternative for Canadian oil exports. The region is experiencing rapid economic growth, and this growth is driving up demand for energy. Japan in particular is a key target market. Japan is the world's second-largest importer of liquefied natural gas. The country is looking for reliable sources of energy, and Canada, with its vast natural gas reserves, is well placed to meet this demand. Canada's west coast offers a strategic advantage. Shipping distances to Asia are shorter and cheaper than from the U.S. Gulf Coast. This makes Canadian LNG more competitive in Asian markets. Canada's LNG advantage: clean and competitive. Canadian LNG has several advantages over its competitors. One key advantage is its environmental performance. Canadian LNG is produced under strict environmental regulations, making it one of the cleanest LNG options available. Canadian LNG is estimated to be 40% less carbon intensive than LNG from the U.S. Gulf Coast. This lower carbon footprint is a major selling point for environmentally conscious buyers like Japan. Furthermore, Canada offers a stable and predictable investment climate. The country has a strong legal framework and a transparent regulatory environment. This provides certainty for investors. Kitimat LNG, a game-changing project. The Kitimat LNG project in British Columbia is a cornerstone of Canada's LNG export strategy. This multi-billion-dollar project is nearing completion. It is expected to start exporting LNG by mid-2025. The Kitimat project is a joint venture between several major energy companies. It has attracted significant investment from around the world. Mitsubishi, a Japanese conglomerate, has a 15% stake in the project. This project will significantly boost Canada's LNG export capacity. It will also strengthen the energy partnership between Canada and Japan. Kitimat LNG is a game-changer for Canada's energy sector. Trade tensions erupt, tariffs and retaliation. In February 2025, trade tensions between Canada and the United States escalated. President Trump imposed tariffs on a range of Canadian imports. This included a 10% levy on Canadian oil. Canada responded with retaliatory tariffs on U.S. goods. This tit-for-tat exchange has raised concerns about a trade war. Experts warn of potential job losses and economic downturns. The Canadian government has been actively seeking to mitigate the impact of these tariffs. It is engaged with other trading partners like Japan and the European Union. It has also explored alternative markets for Canadian exports. Reshaping the global energy landscape. Canada's strategic shift in oil exports is set to have far-reaching consequences. It has the potential to reshape the global energy market. By diversifying away from the US, Canada is becoming a more significant player on the world stage. This shift is also changing the dynamics of the North American energy market. Canada is no longer solely reliant on the US as its primary customer. This gives Canada more leverage in energy negotiations. This move also has geopolitical implications. Canada's closer ties with Asia, particularly with countries like Japan, are strengthening. This could lead to new alliances and partnerships. Navigating the future of Canadian oil. Canada's oil market strategy is still evolving. The country faces a number of challenges. These include volatile global energy prices, increasing competition, and the need to transition to a low-carbon future. There is ongoing debate in Canada about the best path forward. Some argue for closer ties with China. They see China as a major potential market for Canadian energy. However, others are wary of becoming too reliant on China. They cite concerns about human rights and China's political system. Despite these challenges, Canada is well positioned to succeed. The country has abundant natural resources, a skilled workforce, and a stable political system. By continuing to innovate and adapt, Canada can secure its place as a global energy leader.